All right. Good morning, everybody. So a little disappointment in the numbers. You know, investors, institutions, whatever, have been so focused the whole year that the Fed is done. The Fed is done. Please give us our way. And well, the numbers were a little bit of a disappointment. And so they were up. Things have come down off a little bit. So far, really not a big deal. Um, So while there was rejection from where it was, as we look at the day to day, it's just unchanged. Basically, down futures here. We're looking at down a little bit. The big question becomes, as always, every day: does it close into a prior day's range? How much does it close under a prior day's low? And excuse me, as we go through our systematic approach of analysis, and one of the first steps is, what's our first reference point of support? That's a prior day's low. And from a daily chart perspective, we're still far from a prior day's low. Prices are moving up, a little disappointment. Intraday, looks a little bit more like a big deal on the hourly chart. This is pre-market, breaking some support. But, what is your focus? Daily chart or intraday? So right now, we'll see how this holds up. We'll look at the other markets. Let me move this thing here. Minor support. The swing high was prior to the higher high there. So coming down there wouldn't be a good thing. Why? Well, when we look at minor support, what we want to see, and again, this day isn't done. We'll just go over the method of analysis. As prices come down, this is major support, and pushes up. We want to see bars, before a pullback starts, to get a decent, comfortable distance above that high, so that when it pulls back, it's really not doing any damage. Where if this was to pull back here and close there, well, it's doing some damage because it couldn't get very far above the high, and it's retracing too far, and we would have a reversal bar really close to the prior swing. And we'll see where that goes. Right now, initial rejection, boohoo. The number wasn't what it was. Maybe a little uncertainty about what the Fed might do. And so with that thought in mind, because of this rejection, we have to look other places to see, does that thought make sense? Right? So, and something that gave us a heads up as far as things getting better not too long ago was this chart. And it's better to look at it on a line chart since you get all these bad ticks here. But this is when things turned down back here in October, besides our internals telling us, hey, you know what, this thing might turn around. I saw this and I was like, that's interesting. And, shared that in the letter. It was like, okay, now we're going to see, is this kind of just like here, kind of like a little freaky kind of thing, weird, and it flips right back up again. And, while it stabilized, it dropped. So now we've got the 13-week coming down here, and it's trending down, and it pokes lower, low, great. And it comes up a little bit, not a big deal. And again, this is an incomplete day, but it's flipping back up. And we're getting this bottom here, which communicates to me, again, depending on where this closes at the end of the day, is that uncertainty is beginning to creep into the markets as to the Fed being done. Now, we've heard that over and over again. Maybe they are, maybe they aren't. But this isn't the kind of price action that we want to see in this intermarket piece of information, is that this is starting to flip back up again, because that tells us that institutions, banks, hedge funds, whatever, are starting to wonder about that. And today's data would support that. So, we'll keep an eye on this and see whether it stays here, whether that maybe flips back down. And today, we got more numbers coming tomorrow. So it's not totally, a done deal as to what's going on here. So sharing that. The dollar, which we talked about end of last week and yesterday, that this is showing a little strength. So at the time when I saw this showing a little strength, it's like, why is that? Other than maybe just coming down, there's this unfilled gap, but really not that big of a deal. The way it came down, you see the weekly chart with the big red bar suggesting it would go lower down to here, and it's showing some, I would say, a little unusual strength, especially getting back above this pivot high. And then I see 13-week yields moving up like that. And I was like, this communicates somebody's starting to think maybe it's not such a done deal that the Fed is done. So we'll keep that in mind. CPI is higher, so strong for US dollar. Well, I don't know about that, Robert. Currencies are primarily tied to short-term interest rates. Not so much, I think, the CPI. So when short-term interest rates start to go up, it does put some support under the currency and vice versa. So we'll see how that plays out. NASDAQ futures, same thing, rejection, cleared those highs. We'll see where it ends up. Same hourly bar. It's at resistance here. And, so far, we've got this correction bar. I explained yesterday what a correction bar was, where you have one or two bars where it takes out the lows and springs right back up again. So, so far, short-term little lip there, not a big deal as of yet. We'll see how that unfolds. Go back to spiders here. Okay, so you see the same story on a closing basis so far, really not a big deal. And so that strength pre-market, this is how these SPX options work. But I mean, I had to look at this 3 times to see, is this right? And so this is kind of like crazy. I mean, the enthusiasm now for the strike to be up here at 46.80, and it didn't come down from the after the news. And it's like a no-brainer. It's like I look at that and it's like, there's no way in hell it's getting down up there today. That being said, disclaimer, anything's possible, right? But I mean, that little after yesterday's move up, and then this morning pre-market, I was just surprised that it didn't come down. So that's way up there. It seems highly unlikely it's getting up there and close to, I guess, what I refer to as a no-brainer. The downside here, I don't think it's going down there either. And most of the days, I mean, recently, it just hasn't hit either strike, but they've been relatively tight, which makes it, a little uncertain as to whether you want to take that risk. So most of them, many days, it's just been too tight. Other news coming out, there's a 42-day bill auction at 11:30. At 1 o'clock, there's a 30-year bond auction. The last time that was out, the markets had a negative reaction. They couldn't sell them. They couldn't sell enough of them. Keep that in mind. That's 1 o'clock. And 2 o'clock, there's a monthly budget statement. I don't know how much of an effect that has, but keep that in mind. There's news coming during the lunch period and then early afternoon. Keep that in mind. But look, as far as this goes, by 12 o'clock, if the market doesn't go up, those premiums will be pretty much evaporated. So it seems very high. That's why, I mean, check your quotes. DB Duck, because I looked at that and I'm like, that seems ridiculous to me. The quotes could be wrong that I'm looking at, but that's where it's been. I checked, it's zero today. I thought maybe I'm looking at tomorrow because it just seems really weird, but definitely double check that, and I'll double check it myself when I get on the other platform, because that just seems too good to be true. Rejection, they are same as everything else. As that popped up and coming back in again. So, it's the same everywhere we look. The Dow is still up here. It was up further, but topping tail, that's up quite a bit, obviously. And throw that alert up there. There's unfilled gaps. So, well, they couldn't sell it. They couldn't sell them all, Robert. I said where the dealers had to take them. I think that's what I remember reading at the time when the market sold off. Not like they couldn't sell them. It just there wasn't the demand that there typically was. So and the market saw that as a negative. Yeah. All right. Bitcoin, that got clobbered yesterday. Nasty big red down bar there. Still in an uptrend. That would be a hell of a red bar to be ignored, but there's an unfilled gap over here to be aware of. Just holding here today. Dan is saying because our debt is becoming junk. Well, yeah, that's uncertainty. It's like how much can they borrow and spend it on stupidity? And we'll see where Sleepy Joe takes it, and who's ever pulling the apron strings over there, the puppet strings. I mean, you can't imagine these people are really that stupid. Can they be? Or are they, the other thought is, are they just trying to take this country down? Well, it's the saying, the love of money is the root of all evil. All right, 10-year. And this is something that we've talked about over the last several weeks, is this coming down to support. And yesterday I mentioned about this, if this had a retest or even took out the low and flipped up. And now when I see the 13-week T-bill that we were looking at starting to flip up a little bit and the dollar gaining strength, I mean, we just have to look at this and say, can this market get over the finish line of 2023 before the proverbial whatever hits the fan? Because if this starts going up and the 13-week goes up, well, we know and the dollar's going up, we know what's going to happen. And the whatever the fangs or fabulous magnificent seven or whatever, they've been underperforming. So there's some cracks in the armor out there. All right. Transport's underperformed. So see, I got this alert here. I'm going to creep this up a little bit. Another tell would be if this red bar, if this flips down today, that's going to be another bad sign. If the transports get weaker, we'll see what that does. And, we had high hopes here and kind of still do that the Russell can continue to bring up the rear. You see where it is, just like the futures, but essentially unchanged. And, if this maybe can, still keep this party going, we'll see. So the Russell, being able to move up here, maybe up toward this high, if that is still in the cards, or whether we get a red bar today. So that's essentially where we are at, to see how far this selling is going to pick up. And, a positive look at oil, this continues to fall. And this is a two-fold or double-edged sword, this falling like this. And as it comes down to this area of these bottoming tail bars, whether it starts to flip up. So if oil continues lower and we start seeing those interest rates moving up a little bit and the dollar up, I think, it starts to look like maybe it's not going to be such a soft landing. So, this year being what it was and things holding up as well as it did, and a lot of positive thoughts for next year based on the longer term charts. The beginning of the year might be a bit shaky, based on what's unfolding. But day to day, we'll read the tea leaves and we'll see what's coming a bit more clearly. All yours, Dan.
Good morning. Give me 1 second. I'm adjusting something. There we go. My alarm went off on Perry. Not many earnings. I don't have many alarms going off. Yeah, on transports, what Greg's saying is transfer. Greg, this doesn't look like what you were showing.
Well, you're looking at the ETF. I was showing the actual transports. The ETF
Yeah,
has,
wow. That's an incredible move off the low. Incredible. All right, what do we got? Yeah, about that spending, I sent Greg a picture of a diagram in Barron's last weekend that says by 2050, it's estimated that our deficits to GDP are going to be at 200%. Right now, they're like at 130. And you would think after COVID, this and that okay, they say that countries really shouldn't be over 100. So 130 is bad. And you would think, okay, we'll get our act together. But this chart just says no, it's going to keep going up, 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 up. And I told Greg, how the hell is this sustainable?
hopefully people get elected next year that are willing to stop the spending.
I mean, just use common sense from a household. Let's say you make 10 grand a month. You don't spend 20 grand a month for, yeah, it's crazy. I mean, the problem is they get to print. We don't, to pay our bills. All right, earnings here. What do we got? Casey, I don't see much volume. Well, of course, but you got to pay the Visa, whereas they don't. Well, they got to pay debt. They got to pay interest on the debt, but they don't have to pay the debt. They just keep rolling it, printing money to pay it. But yeah, they're finally talking about the percentage of our annual budget that's going to having to pay interest is a pretty astonishing number. All right, this I don't see anything to do. NUE, I just had an alarm go off. Hey, tomorrow we're talking about wide range bars. This is a beautiful, and obviously just a wide range bar is not a tradable event. But we use that bar in connection with a pattern. And this was a bearish gap down, wide range expansion, engulfing close, buy setup on support at the 20. So that's an amazing power reversal with a buy setup. That looks great. BLBD 23. This looks like a short-term exhaustion gap. Things that are rally like this into earnings and gap up. short of 5 to 10 minute low. Hasbro having some problem. This was a potential bottoming pattern. And they announced, much more layoffs. 20% layoffs. That's a huge number. I don't know. Let's say hypothetically it closes with a gap fill. Then that's going to be what we call a bear gap that bullies, and that'll be a bullish trade tomorrow. No pattern, gapping up a little. And Oracle's the only big one. Man, that's a big gap. I'm actually surprised the Qs prior to the 830 number were holding up so darn well. I mean, I know Oracle's not one of the seven, but still, it's it's the real deal. I would have thought that would have sent a little bit more shivers in the Qs. That's why I have that in a window, other computer. I'll see what it does. Let's just see what else I got here. A triple V. This is what we call a bull rectangle. Here's your flag pole. You draw a big rectangle on this consolidation. Same daily, weekly. It's the same pattern, bull rectangle, daily, weekly. Just the weekly condenses the data. And my up alarm went off, but I don't trust it if there's no big volume, but we'll come back to that. Choice Hotel says they're going to continue trying to take over the White House here, WH. And that news came out, I remember on this bar right here, the takeover attempt. So the fact that it's recovered like this is telling me that the market is pricing in a very high likelihood of this deal closing. But with leisure, this junk has moved. Look at RCL. Look at that. That is up 50% from those lows. My neighbor's the manager of the Hilton down the street from me. Look at that, all-time highs. She told me their hotel is slammed because it's right across from the port here in Fort Lauderdale. And they have 6 or 7 cruise ships here. And she says, yeah, they're full. So people are traveling. Look at Marriott. I had all of these as put spread ideas in last weekend's letter, but there wasn't much premium. But look, all of them took off. Perry is acquiring a company. Wayne, the reason I say that with a little bit of shock in my voice, because I would say 95% of the time, the acquirer gaps down. And so what the gap up is telling me is common sense. It's telling me the market likes the acquisition. Right? I'm actually shocked that they do gap down 95% of the time because that's telling me that shareholders are not agreeing with the board action, or at least the price they're paying for it. In which case you scratch your head and say, why is that the case? Why is the board not there representing shareholders' best interest? So think about that. I'm not going to waste time now, but just think about what I just said. 95% of the time it gaps down when they acquire a company. So you're doing something they don't like. Sphere, no. Oh, this was on Sam's list of the sell setup. All right, Sam, these are a couple of years I wrote down, big old bottoming pattern on Go, but now the gap down is totally destroying that pattern. Now it looks like a call spread candidate, LOW. Nice bullish price action here at resistance with a void. I have an alarm at 208.30, I think. ACCO, big monster inverse head and shoulder, left shoulder head, right shoulder. There's some neckline, closing breakout. I got an alarm at 5:53. Triple N buy setup. It came in hard, so you don't expect a new high, but these are a SAM all year trades. I got an alarm at 40.80. TSAM I like, closing breakout. Tomorrow, wide range bars. Look at this bar. And this is what I said in that other stock. A bearish gap that bullies with a void. That is a bullish bar right there. And look what happened. Next day, it just continued. But now it's gone sideways for 3 weeks. So the closing breakout, next target, this prior high, 30.90. So I like that. Fitador, another bull rectangle. Your flagpole starts down here. Big old flagpole rectangle. Closing breakout. Now this is one I would prefer an inside bar and then wait till after the Fed to do a 1, 2, 3. A calm, another bull rectangle. Flagpole. Bull rectangle. IG, PGTI. Yeah, it's trading range. I like these other ones, IG, that I'm talking about better. All right, Hershey. Alex made some comment about this yesterday. I don't know what it was, but I don't care. And the reason I want to watch this is it's a 1, 2, 3 right now on the daily and weekly. But this is the third time it's been here. It's a potential double bottom on the weekly, but the entry would be last week's high, right? So I have up and down alarms because this could, I need more information on both, but this could be a long or short. And even if it is a short, I'm going to be on guard for a breakdown failure. And then that might set up the right side of the W. You all see that? All right. Let me type all these out. IG in case the computer moves it. David AXP. Spear alarm SPHR. Sam, that's your short, but I don't see any prints. So Spear, let's keep an eye on, maybe 5-minute low. AXP. Yeah, David, we talked about this one yesterday, I remember. Yes, it is a 1, 2, 3, 4, but it's in an uptrend with not a big price void. But, I don't know, watch it 10, 15, 30-minute low, maybe start with a day trade. I have zip alarm. This is, we talked about flags a lot yesterday in the green room. I don't call this a bull flag only because I don't have a clear flagpole. Flagpoles have to be more vertical momentum moves. And this is just a nice churning uptrend. But regardless of what you call it, that's bullish consolidation with a void. So zips on my long list. Meta alarm. I had this as a call spread watch, but nothing to do. Yeah, there's a buy setup with another potent reversal. Yet here's another one that we're going to be, tomorrow MT live. Look at Lyft on Friday. Look at these wide range bars. Buy setup. I'm mad I didn't give this as a core because look at the monthly. It's not cleaned at all as a core. But the action on the daily, weekly, look at this beautiful volume, suggests to me this could be a long-term low. This looks good. Just the entry was last Friday. Visa alarm, Alex, that's on your list. That looks great. The only problem is I don't want longs right here with the market falling. And we got to start being chilling more ahead of FOMC, but Visa is a bullish pattern. All right, NUE alarm went off. So on the directional, I like this. We're already in a put spread. We did yesterday. And W alarm went off pre-market. This we bought yesterday. Actually your trades now over here. ANET. Yeah, your entry was last Friday though.